So markets are going up. In the month of March, the markets have gone up, which has not been seen for the last several months. Last we saw was in December. Nifty 50, the broad index, has gone up by 7% in March. And for 7 days, every day it was going up. Mid caps have gone up by around 8%. Small caps have gone around by 9%. All this has happened in the month of March. So are the markets going to go up or will they go down again? Well, I don't know, but there are a lot of things that we learn from this month of March, these last few days, probably the last 15 days. And I'm going to take you through what is it that we learn. Just because the markets are going up doesn't mean everyone has gained. No. I'll show you today who all have lost in this market and who all have gained. And it's not the end of the road. What can you do as next steps? There is still an opportunity for you. And that is what we're going to explore in this video. Stay till the end. And what direction do we see here from here? And what if the market goes up? What do you gain? And to what extent you can gain? Hi, I am Franky Fernandes, a certified financial planner, and I'm also a certified marriage coach. So I'm basically a money and marriage coach, and my mission is to help all young families from 30s to 40s. I believe these are the golden years of investing and gaining from compounding. And I believe that it is not just the money that you have. Money you will make, but what also matters is your relationship. So if you have money and a good marriage, you will reap happiness and you will have a good life, a good quality life. And that's what my goal. So let's get into today's video. The markets are going up. Who has gained and who have lost? And what do you do going forward? So first, let's do a recap of where the markets were and what has happened right now. What was the peak? What was the bottom? How has the market been functioning in the last 6 months, starting October, November, December, Jan, Feb, March, exactly 6 months. So what happened to the broad-based index Nifty 50? Nifty 50 was at its peak on 26th September 2024 when it was 26,000, around 26,216. And then it fell and kept on falling till 21st November by 11% it fell. That was quite a huge fall. But again, it went up by 6% in 13th December 2024. But that was temporary. Then it kept on falling till 4th March. That is, it fell to 22,082. That means it fell by roughly 16% overall. But in the last month, around 15 days, trading days, it went up by 7.2%. That is very encouraging. Again, we see, because in the last 6 months, it has never gone up by 7%. And every day, in fact, from 17th March to 25th March, the market only kept on going up. Even if it was little, it kept on going up. These are good signs. So the markets are going up. Now, what happened to mid-cap 100? The peak was 60,850 on 24th September 2024, and it fell by around 12%. Market fell by 12%. Then once again, went up by 7% on 3rd Jan. It fell by 12% on 13th November. That was the bottom. And then that was 53,800. And then once again, it went up to 58,000 by 7%. But then from 3rd January, it has kept on falling. It fell by 17% from January till 28th February. So overall, it fell by 21%. So mid-cap 100 index fell by 21%, a huge fall, which is, you can call it as a bear market. That means the mid-caps were in the bear market. But then in the last 1 month, it has been going up, and it has gone up by 8%, 8.5%. So in the last 6 months, this is the first time I see it is going up by 8.5%. So on the 15 trading days. And in fact, there have been 6 days continuously, successive days, when the mid-cap 100 has gone up. Now let's take a quick look at small cap. So the small cap reached their peak on 23rd September, around 19,548 was the index. And then it fell by 10% On 21st November, it fell by 10%. By 21st November, it was around 17,596. Then again, it went up in December to by 12%. Right? It fell by 10%, again went up to 12%. But then since December 11th, it has been falling, and it fell to 14,660 on 3rd March. It fell by 25%. And that has been the overall fall. It has fallen by 25%. Small cap 100 index. So this has been the market. It fell, it went up, again fell, and now we see a signs, good signs. And the good thing about it is that in the last 6 months, it has not gone up so much. So the small cap index has gone up by around 9.8. That means 10%. It has never gone up 10% in the last 6 months. So what does this tell us? Obviously, it tells us that the markets may be going up. So I don't know. The markets may fall further, but seems very unlikely, especially because every day the market has been going up, and it has gone up in the last 6 months. The maximum gains we have seen, the probability of going up is higher. Now, what does this mean? Definitely, if you have been invested in the last 6 months, you have gained. But I want to talk about those who have lost. Those who have lost and will continue to lose. Number one, if you have never invested in the stock market, if you're watching this and if you've never invested in the stock market, or especially the mutual funds, because it is managed by fund managers, you have lost. You are losing. Because if you had invested in one of these days in the month of February, you would have gained 7, 8, 10% already. So you have already lost that, right? So if the market continues to go up, you will continue to lose. If the market goes down, there is nothing to lose if you are invested, because you will definitely gain. And I'm going to talk about, towards the end, I'm going to talk about what kind of gains we can expect if the market goes up, especially if it touches the peak. So number one was those who never invested. Number two, if you, in panic, have sold. If you realized, if you felt that the market is falling, it is crashing, it is crashed by 20%, it is crashed by 25%, small caps, mid caps 20%, and Nifty 50 has fallen by 15%, and if you panicked and came out, you have lost. Because if you have sold, you have missed this 10% or the 7% or 8% rally. You have missed it clearly, because you would have come out at a loss. Especially if you have redeemed in January or February, or even if you redeemed it in October or November, you have lost. Especially the loss is bigger if you have sold your mid cap funds, small cap funds, or even thematic funds. So watch my videos on thematic fund and also on small cap and mid caps. Why you are losing? You have lost it in the short term, and you're going to lose it in the long term also if you have sold it in panic. But that was a big mistake you made. You've already lost, and you'll continue to lose if the market goes up. Number three, if you stopped your SIP, if you are a mutual fund investor and out of panic, worries, anxieties, if you stopped your SIPs, you have lost. Let me share with you a news item where it talks about what has happened to the SIPs in the last few months. So here is an article from Economic Times on March 13th, 2025. It says mutual fund SIP stoppage ratio spikes to 123% in February. What is the SIP stoppage ratio? SIP stoppage ratio is the number of discontinued SIPs compared to newly registered SIPs. A ratio exceeding 100% suggests that more SIPs are being stopped than started. Right? And here it says the mutual fund SIP stoppage ratio rose to 122.76% in February, up from 109.15 in January, as more investors discontinued SIPs than started new ones. SIP inflows dropped nearly 2% to 25,999 crore, while total SIP AUM stood at rupees 12.37 lakh crore. Experts suggest the decline is seasonal and encourage investors to stay invested. Right? So this does suggest that probably many have stopped their SIPs out of fear, worries, looks like. If you are one of them who stopped your SIP, probably you stopped your SIPs in October or November when the markets are crashing, you have lost. Because from October till February were the bottom, except for December, it was bottom. You would have got a lots of units. And if you stopped in October or November, you lost what markets fell in February, in January and February. So you would have got a lot of units. Plus, you would have been saving regularly. Probably now your money has gone into maybe savings account, FD, or maybe debt funds. Now the market has gone up in March. So that gain you have lost, and if it continues to go up in April, if the earnings are good, corporate earnings are good, then if the market goes up, and if the rupee depreciation is controlled, and the tariffs about the discussion about tariffs settles down, markets may go up. I don't know, but I'm guessing. And if you have stopped your SIPs, you're going to lose, and your loss in the next few years will be in lakhs and crores. So you have already lost. And who else have lost? Those who timed the market. Those who thought that the market is further going to bottom. They waited for the right opportunity. And suddenly the market went up in March. So they lost. They missed the bottom. They were planning to time the market. Probably they thought the markets may continue to go down. So if you are one of them who've been waiting for the bottom and trying to time the market, you have lost. And finally, all those who do intraday trading, FNOs, SEBI already says that 90% are losing money. So if you are one of those intraday traders and trying to time the market and having those puts and options, I don't know. Please check. Have you gained in the last 6 months, or have you lost? Especially, have you gained in the last 1 month, when those long-term investors have gained? So these are the kinds of people who have lost. Are you one of them? Or if you never invested, if you sold in panic, if you stopped your SIPs, and if you were trying to time the market, you have lost. And especially if you are doing intraday trading and FNOs, you are the best judge. So now the $1,000,000 question is, will the market keep going up, or will it go down? It doesn't matter. If you have seen in what I've just talked, who have lost is those who stopped investing, who never invested, or those who stopped investing. Who gained are those who continued their investments. So if the market goes down or goes up, who are going to gain? Only those who stay invested. And probably if the market goes down, those who increase their investments or SIPs, and you can watch my video where I've talked about this, that how to gain from falling markets. Now, what if once again the market rebounds and goes back to the highs, the last highs? Is it possible? Yes, it is possible. In the next few months, or maybe a year, whenever it is possible. So I want to take you through a scenario where we will see what happens. On one hand, SIPs, and on the other hand, lump sum. What if you do a lump sum today, and by the end of December 2025, the market goes back, rebounds to the last peak, which is in September 2024? Is it possible? In all likelihood, it is possible. And SIPs, on the other hand, you keep investing. So we will start the SIP from December 2024, which was the peak. Okay, which was the peak. And right now we will see what are the values look like. And if the NAV goes back to the same peak which it had touched in September or December 2024, what would happen to your investments? So let's take a quick look at this. In my example, I've taken one large cap fund, one mid cap fund, and one small cap fund, right? A disclaimer again here, these are just for demonstration or illustrative purposes. I'm not recommending these funds. I've just picked up some of the common popular funds, good, better performing funds. I've taken Nippon India Large Cap Fund. I've taken Motilal Oswal Mid Cap Fund, and I've taken Bandhan Small Cap Fund. So let's take a look at large cap. Now, the green, what you see here, is what I have simulated, I have assumed. So this is where you started investing in December 2024, 10,000 per month. And the NAV, this is the real actual NAV, 86, then it goes down to 84, 81, 82. So by 20th March, it is 82.41. And this is what are the returns. You invested 40,000, and from December onwards, you got a return of around 249 rupees of 4.72% annualized returns. This is the highest NAV ever, 91.152. Now, here the NEVs have fallen 86, 84, 81, 82. The NEVs have fallen, so they are not 91.15. What if the NEV reaches to 91.15 by December, right? So if it goes by December, which means the total NEV rises 91 minus 82, around 8.7447, and I've assumed that every month there's an increase of 0.972. So that takes it to 91.15. So every month there is an increase of 0.972. So what does that mean? So here, these are the new units that you receive. And these are the cumulative. So cumulative, you've got 1510 units. And that multiplied by the latest NEV. Sorry. 1510 multiplied by the latest NEV, 91.15. That's what we said. So the value is 1.37 lakhs. That means you invest 1 lakh 30, you get 1 lakh 37 if the NEV goes up gradually. And the returns are 12.10. 12.10 is in 9 months. So this is the annualized returns. This is the XIRR. This is the annualized 12.10. Right. So this is the SIP. And what if you had done a lump sum? So the total increase in the NAV is 10.61. Annualized returns is 14.15%, which means if you do a lump sum today, March, and by December, if the NAV reaches once again the peak, which means the markets also go back to the peak. For Nifty to reach the peak once again, we are short of 10%. So around 10-11%, if the market goes up, we will reach the peak. So in this case, almost the same. The NAV is 10.61. So if you do a lump sum also, you get around 14% annualized returns in a large cap fund. So this is again a simulation and assumption that if the NAV goes back to the peak NAV, which is a probability which will happen someday, if not in 9 months, probably in another 1 year or so, definitely you will gain 10% lump sum, or probably you will earn 12% on an SIP. And if the market doesn't reach in the next 9 months, maybe even the next 12 months, SIP will give you better returns, because when the markets are down, you get more units. Let's take a quick look at mid cap. Same, everything is same. If you continue to invest 10,000 per month, and if the NAV reaches the top, so here is the peak NAV of a mid cap of Motilal Oswal mid cap fund. Right now it is 91.2240. If it bounces back to 110, your returns will be 19.84. This is the annualized returns in an SIP. And what will be, what if you do a lump sum? If you do a lump sum at today's NAV, by the time it reaches, you will have an annualized increase of around 27%. And with small cap, the same thing, you will get 19.14 in an SIP, and you will get 18.92 increase in a lump sum, which translates into 25.23 annualized. So this is the kind of increase you will get if you invest. Now, who do you think will do this? Now, the first part I talked about who lost. Those who panicked, sold it in panic, those who never invested, those who stopped their SIPs, or those who are timing the market. But there are investors who are going to gain. When the market goes back to the peak, there are a set of investors who will always gain. Whether it is lump sum or whether it is SIPs, they will gain. And who are those investors? Are you one of them? How to become one of them? And that's the last part of this video. Who are those? So if you want to become somebody who always gains, who never fears, if you see the people who lost are those who either had fear or greed. Now, who are those investors who will never have any fear or greed? And they are these type of investors. Who are they? Number one, they always have a financial plan. If you are a young family in your 30s, if you do not have a financial plan, you are in danger, simply because your financial plans will have goals, retirement goals, children's education, children's marriage, a house, or whatever. you want to do, if you have a goal, if you've written down goals, and if you have found out what what you need to achieve those goals, you have, that means you have a financial plan. If you want to know more about a financial plan, how to make a financial plan, watch my video. I've got two videos. They are DIY videos. One is on retirement planning and one is on common financial goals. Please watch those videos. There's an Excel sheet. Download that Excel sheet and enter your numbers, your budget numbers, your financial goals, your children's education, marriage, everything. Just enter there. You will come to know what corpus you require and how much you need to invest today to reach that corpus. So please watch. So somebody who has a financial goal will never have this issue. They will continue to stay invested. That is number one. Once you have a financial goal, what do? You find out whether those goals are long-term goals, medium-term goals, or short-term goals. This is very, very important. Short-term is if you have a goal which is less than a year and that your target is less than a year. For example, you want to buy a car, you want to buy a refrigerator or whatever within a year. So that's a short-term goal. Then there's a medium-term goal. Medium-term goals I have classified from 1 year onwards till 5 years. So any goals that are between 1 and 5, they are medium-term goals, and they could be, for example, you want to buy a house, or again you want to buy a car in the next 2 or 3 years. Maybe your children's fees in the next 2 3 years, or less than 5 years. So that makes it the medium term. And then finally, the long term. Long term is anything above 5 years. For example, your children's education. If you are a young family and your son or daughter's education is in the next 10 15 years, that becomes a long term. Your retirement becomes a long term, because if you're 30, in the next 30 years, you'll have your retirement. So those are long term. So first is the financial goals. These are the financial goals. Second is you classify into short, medium, and long term. Third thing is find out your risk profile. This is very important in these markets. Right time to find out what is your risk profile. When things were all going up, everybody's risk profile was aggressive. But the moment the market started crashing, many were afraid. So that tells your risk profile is not aggressive. You can't take too many risks. You're afraid. When you see your markets falling, when you see your investments falling, your risk profile, that means you have a lower risk profile. It could be aggressive, it could be conservative, it could be moderate or conservative. Conservative means you cannot take risks. Moderate, you can take some risks. Aggressive, you can take a lot of risks. So find out what is your risk profile, and now is the right time. Based on this risk profile, then you align them with the goals. Short term, medium term, and long term. Depending on your risk profile, you can decide what kind of funds. For example, from 1 to 5 years, depending on your risk profile, you can have long-term debt funds, or medium-term debt funds, long-term debt funds, or hybrid funds. So that depends on your risk profile. And then for long term, depends on your risk profile. You can either have large cap funds, flexi cap funds, mid cap funds, or small cap funds. If you want to know more about these funds, watch my video where I've covered all this in announcing the right mutual fund, not for you. I've clearly explained the risk profiling and the short, medium, and long term. So if you have the financial goals, you've segregated into the short, medium, and long term, and then you've found out what is the risk profile. And then what you do is you set aside money that you need to invest for your retirement, for your children's education, for their marriage, or for your house. Based on that, you come up with that number, that SIP number, and you start your SIPs. And when you do your SIPs, what happens? You don't see whether the market goes up or down. You want to know more about SIPs? Watch my video. I have covered this on SIPs. So there are a couple of videos, you can watch them. So if you're doing your SIP, what will you do? You will not see whether the market is going up or down. You will stay invested. You will continue your SIPs. When you have some lump sum, you will invest. You keep investing. And the message in this video is that as long as you are invested, you will gain. Because bull markets are always longer than bear markets. Watch my video. I've clearly explained. So if you do this, you will always make money. You'll always grow your wealth. You will never not invest. You will never sell in panic. You will never stop your SIPs because you have to reach your goals. And you will never want to time the markets. I have timed the markets. I know what I've lost, but I've also done SIPs and I know what I've gained. So I hope you've got the message from this video. Markets are going up, but there'll be some who will be gaining, there'll be some who will be losing. Which party you want to be in? So I hope there is some learning from this video. If you like this video, please give a thumbs up and subscribe. If you did not like anything, please show me a thumbs down and let me know in the comment box why you didn't like it. What was it that I could have covered? So if you are new to this channel, I encourage you to subscribe and also forward this video to whoever needs it. Right? Thank you for watching this video till the end. I'll see you soon.